for watching. Welcome to this Markets.com company profile of ConocoPhillips. I'm your host, Luisana Swegard. Let's begin with some basic information. Founded in 2002 by Conoco Incorporated and Phillips Petroleum Company, ConocoPhillips headquarters are located in Houston, Texas. 33,000 employees work for ConocoPhillips, which has a market cap of $126 billion and operates worldwide. The company is composed of the following segments: E&P, midstream, R&M, Luke Oil Investments, chemicals, and emerging businesses. ConocoPhillips is run by CEO James Mulva and CFO John Carrig. Moving on to the market, ConocoPhillips is traded on the New York, Frankfurt, Mexican, and Swiss stock exchanges. The major index it is listed on is the S&P 500. Now we'll explore the company's reported financials for 2007. Reported revenues came in at $195 billion, and net earnings came in at $12 billion. As we take a look at the balance sheet, total assets were over $177 billion, while liabilities were $88 billion, and equities at $58 billion. The debt-to-equity ratio of the firm was sitting at 0.237. On December 31st, 2007, the stock closed at $83.30. As of August 28, 2008, stock was priced at $83.08. In 2007, ConocoPhillips paid $2.6 billion in dividends to its shareholders. Moving on to operations now, ConocoPhillips offers products in oil, gas, fuel, lubricants, and petrochemicals. The company sees great growth possibilities in exploration and production of both crude oil and natural gas assets, which is why they are investing more money to explore for natural resources. They are also taking their time to rationalize their portfolio and are looking at strategic alternatives for assets that are not performing as well. This includes their gas stations, which they recently announced to have sold the rest of them. Also, they know that sometimes the best thing to do with excess cash is to return some to the investors, and they are doing this through stock buybacks, which will grow EPS and dividends. Because ConocoPhillips is an oil company, it is heavily dependent on the price of crude oil. As the price of crude oil goes down, so will their revenues and profits. Having said that, it still does not make this company a bad stock to invest in because the price of the stock usually already reflects the price of oil. The problem is that if oil drops too much, it will make some of its planned exploration projects too expensive. Also, while it says that it is rationalizing its portfolio, what it is really doing is rolling back the diversification of its portfolio and trying to turn the company into a pure play on exploration. And that will do it for this Markets.com company profile of ConocoPhillips. Again, thank you for tuning in. I'm your host, Luisana Swegard. See you soon.